Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that we have a market which is currently breaking below a very strong historical structure support area. In fact, this zone has been acting as support here, against support here. The market tested it 2 months ago with this wick and rejected it to the upside. However, what we're noticing is that at the moment we just had a monthly close below the area last month, which ended 2 days ago, in which gold managed to create this monthly close below the zone. Now, as you know, previous support, once it is broken to the downside, is turned resistance, meaning that now that we had the close below the zone, this previous support is turned resistance. And what we could expect is a potential retest of this previous support and resistance before then getting more bearish continuation. Dropping down on the weekly time frame, what do we notice? Now, from a weekly perspective, we must adjust our structure levels. In fact, we must notice how from here all this correction started. The market once again here reacted to the zone, showing that in fact there is strong demand at this area. But now that the market has broken below the area, the previous support and demand is now turned supply and resistance. So what we could expect at this point is a retest of this supply, and from here to see the rejection to the downside. So this means that from a technical perspective, we could expect a little bit more bullish price action to develop before then seeing some bearish continuation going forward. We must also notice how we actually have an impulse and the start of a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can notice how we have a 0.618 golden ratio Fibonacci retracement, which is lining up perfectly with this previous support, now turn resistance, that we could expect the market to go and test before then seeing a rejection lower. So as we have already seen also on the monthly, we could expect short-term bullish price action before then longer-term bearish continuation. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we have to notice one thing. All this area here was a previous area of consolidation in which the market created this horizontal range. Now, usually when you see an area of consolidation like this, the market will go and test the top of the range. So basically you have a consolidation area in which the market had moved inside of it in the past. The market then creates a break below the zone. You expect the market to test the high of this range, and from here, then create a rejection to the downside. And what we can notice, in fact, is that we already had the test almost of the high. We have this wicks above the zone. Now, what could easily happen at this point is that we get a little bit more bullish continuation to really go for a stop hunt of all the stop losses that are above these highs, of the people that are already shorting from here, and then we actually get the move to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can notice is that with the last reports, net positions have been decreasing. We went from having 117.7k net positions all the way down to having 52k net positions. So basically net positions were cut in half. And this is coming with thousands of shorts getting added from an institutional perspective, specifically 6.2k shorts added with the last report and 7.4k longs getting closed, reaching 155k shorts compared to only 207k longs. So from an institutional perspective, what we are actually seeing is that shorts are getting slowly increased and longs are getting slowly decreased. So clearly the positioning is shifting to the bearish side for gold, when it comes to the institutional part of the market. So this means that we could definitely see the market, after maybe a stop hunt to the upside, provide more bearish continuation. This is definitely a possibility. So how we could be approaching such a move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to create more bearish continuation. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have the possibility to join with a discount. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you have the possibility to get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.